Our mission at SD Bullion is clear. The lowest cost gold and silver available online. While we do not have pretty blue boxes, free shipping, 4% credit card fees, or glamorous gold and silver infomercials, SD Bullion has the lowest prices that may save you hundreds on your next order. So before you make your next investment, do the math and join the over 15,000 new customers who have recently made the switch to SD Bullion. Why pay more?
All right, well, I'd first like to discuss about the Fed's rate hike. Now, what's really interesting is you think that the Fed actually hasn't raised interest rates. You think this was just all a fake, and instead the Fed is implementing more quantitative easing. Did you want to discuss a little bit about this?
Yes, I think that's a real good capsule summary. To begin with, the Fed is one of the greatest lying institutions in all of modern history, and they are the tool for tremendous largesse bestowed upon their own members. Now, they are grand liars, but they are also enablers of great theft. And the greatest theft they've ever had was following the Lehman incident, the Lehman event, the Lehman death in 2008. They had two different waves where they gave near 0% loans to the owners of the Fed. $23 trillion. Okay? I would like to get a 0% loan for $1 trillion. I'll settle for maybe $1 billion. You know what I'm trying to say. All right, so these are members of a banker crime syndicate. They don't tell the truth. They never do. Greenspan used to rely on his obfuscation, which really meant confuse the heck out of you so that you are impressed enough to say whatever you want to do. When they recently, in 2013, had their taper talk, they threatened to raise the interest rates, and I called it a trial balloon. Now they've done more. They've actually made an open statement that they were raising the interest rate for the Fed funds by 25 basis points. And there are other little details related to that. But I'm calling them liars because if you look at the effective Fed fund rate, 3 days after the supposed rate hike, it was not 25 basis points higher. It was about 8, which meant that they really had not enacted their rate hike after 3 full days. So what on earth were they doing? If you take a look at now, you see that somewhere between 16, 18, and 20 basis points is the hike on the effective, not the hike, is the increase on the effective Fed funds interest rate. But more importantly, what you see now is that the 3-month Treasury bill has an inverted yield versus the Fed funds rate. This cannot stand. They've actually caused a disruption on the very short end of the Treasury market. When they announced the rate hike, they slipped in something that usually is mentioned in the second and third paragraph and not very well focused upon by the shallow minds out there. I'm sorry. I just don't have a whole lot of respect for the financial community, the analysts, the observers, the traders. They just look at the headline and go, okay, here's how we act on it. Here's how we make money on it. Here's how we exploit it. Here's a trading strategy. What they did was they cited a heavier reliance on the reverse repo. And I'm willing to admit I got something backwards. Before I thought we had a confirmation of gigantic volume of $40 billion a day of failures to deliver on Treasury bond sales. I identified that as Wall Street doing naked shorting of $40 billion a day. By that I mean selling Treasury bonds that they do not own. I mean, I'd like to sell a whole stack of IBM stock that I don't own and never be held responsible for it. We can't do things like that. But what they've done is they've soaked up cash and made sure that the big banks are loaded with treasuries, which they can leverage upon. Okay, so if you look for a summary statement on what they've done with these reverse repos, they've assured that the big banks are leveraged more than they ever have been before. And I've used a year ago an analogy of a Tower of Babel. And this tower is higher now, and this tower is more narrow now. And that's a very bad combination for instability. Okay, but take a closer look. What does reliance on the reverse repo mean? It means that something else has stepped in to carry the load. They're soaking up a lot of treasuries that are being dumped on the market. For example, China, after getting turned down at the IMF for inclusion in the SDR basket, that's special drawing rights, which is the dollar, the pound, the euro, and the yen from Japan, China exacted its own revenge. And what they did was they sold $250 billion worth of treasury bonds in August, September, and October. That's $250 billion. Take a close look at the treasury bond yield for the 10-year, and you see no change. Since when does a market endure $250 billion in dumping and not change? The answer is when they have the Exchange Stabilization Fund, the ESF. The ESF, Exchange Stabilization Fund, is a major component at the Department of Treasury. It's shrouded in secrecy. It's involved in dozens of financial markets and rigging, all illegal. And they do their activity under the cover of national security. So, China forced out into the open the Exchange Stabilization Fund. I'm going to call it ESF from here on. They forced out into the open the ESF activity at the Treasury Department. So when the Fed announced that they were going to rely on reverse repo more and amplify its volume and reliance, what they're really saying is we're going to a double-barrel QE. And this time the volume will all be kept hidden because the ESF operates under total secrecy with national security implications. The Fed's rate hike was essentially, Eli, an admission that they're going to double-barreled QE, infinite volume, and doing it in total secrecy with an implication of national security. Their admission now of the rate hike and reverse repo essentially says the dollar is now at national security risk. This is very, very big. The ESF is, I think, a criminal contraption. It's involved primarily at its origin. It was involved primarily as a currency stabilization fund to make sure that following the Bretton Woods and that everything was, hunky-dory in the currency world when we got rid of the gold standard. So take out the gold standard and its stability. You need to put in something else to assure the stability, and that's what the ESF did. Now we're seeing it linked with QE in a formal sense, but in a way that most people gloss over and don't pay a rat's bit of attention to. This, I believe, will cause the dollar to rise. because you have the impression around the world, well, the Fed is tightening. The Fed's going to offer more on their interest rates. The Fed is offering a higher yield for the excess reserves that it takes from the big banks. This is a rate hike. Most rate hikes cause a currency to rise. Naturally, it attracts more capital. But in this case, we might get kind of a false rise from the, not a spiritual, ethereal effect, the psychological effect. But this is while most central banks are dumping their treasury bonds. It's an activity to cover the treasury bond dumping, and to do so under the guise of national security. So we've gotten to national security issues now regarding dumping of the dollar in the form of treasury bond. This is very big, very important. I outlined it in the December hat trick letter in more detail, like a few pages, and what it all means. It had to be digested for me in a matter of a couple of days, because I think the announcement on a given Wednesday in early December was very close to the deadline for posting a report. So I put my head together with colleagues, and we figured out what this was. And I give a lot of credit to Rob Kirby and good credit to Euroraj. Rob Kirby is all over the Exchange Stabilization Fund and its activity. He calls it the most gigantic market rigging contraption ever devised by mankind.
So with respect to the apparent Fed rate hike, which, as you explained earlier, is not actually a rate hike at all, the Fed instead is just going to do more quantitative easing. What are the implications of this for the economic reset?
Well, I think the Fed was reluctant to make the rate hike, and in order to make it happen, they had to put on the second barrel of QE, which they don't want attention drawn toward, and that's the Exchange Stabilization Fund. So they're going to the double barrel QE since the reset is going to require a lot of countries to dump their treasuries. So they put in place, they made more clear the Exchange Stabilization Fund as soaking up the reset consequence of massive dumping. Hundreds of billions of dollars worth of treasury bonds are going to be dumped. That's pretty significant.
Click here to subscribe for free so you will be notified when more of this interview is released. Or click over here to watch the full interview now. This video was brought to you by ReluctantPreppers.com. Click here to watch Reluctant Preppers interview with Jim Willie, where Jim Willie reveals that the elite are stashing gold while bashing it in the press.